Hi, Tim Bigham back again this week for Traders Exclusive, and another crazy week to say the least. Certainly we have seen the market having a little bit of what I term indigestion up at these levels here. You know my view on the market. I think we probably are stretched on valuation, but it's that yin and yang versus, expensive now stocks versus that free money parade that with Yellen in place to take over for Ben Bernanke. Certainly it looks like that will continue. That's the mantra. Worldwide, looking like it'll continue, although China, with their repos not in place, looking like they're tightening. India tightening too. Food inflation over there is off the charts. So what we're doing here is having a worldwide impact and really actually hurting some of the rest of the world with food prices and the like. But until further notice, I think it's pedal to the metal. So I think the market will just churn around at these levels here going forward. So I'm again positioning to kind of sell both sides of the market, sell rallies, buy dips for the foreseeable future, although we're entering into normally a pretty bullish period here. So I think earnings have come out lukewarm at best. Revenue is very light. We saw what happened with Caterpillar, and the market reaction really somewhat of a yawn overall. Caterpillar got hit. Overall market really not fearing anything, and there's kind of that pervasive complacency about, well, we'll wait till later on that gives me more pause for concern than it does to take things higher here. So until further notice, I think we're kind of stuck here, that battle between rich stock prices versus free money. A couple trades I'm looking at. Microsoft reports after the close today. Love the term structure of volatility. The front weekly options that expire tomorrow on Friday are trading at about a 74 implied volatility, off the charts rich. The regular November monthly options trading about a 25 implied volatility, really cheap comparatively. So what I'm doing is just positioning slightly out of the money, looking for a pullback on Microsoft towards that 33 level stock. At last I looked, it was about 33.75. Buying the regular November monthly puts, selling the weekly October 33 puts, paying less than 20 cents for that, about 19 cents. So that's my total risk on the trade if you get a big blowout in either direction on Microsoft. If not, if we have a pullback towards that 33 level, slightly bearish, that spread will not only expand as a function of price, but more importantly, that term structure volatility will absolutely flatten out. Once the earnings come out, those weeklies, the front weeklies, Octobers, will come down to about the same implied volatility level as the Novembers. So really like that trade a lot. Another trade I'm doing is selling out of the money call spreads on the big Momo stocks. Netflix came out a couple of days ago with earnings, opened at about 390, closed today under 330, so at a 60-point trading range. That's the kind of price action I like to see for kind of a topping formation, to say the least. Normally you don't get that kind of move, but so I'm selling the weekly, the 340, 345 call spread for about 90 cents. Did that yesterday. We'll continue to do that out in time. Same thing with Tesla, looking at the 185, 190 in November. So I think Momo is a no-no for the foreseeable future. So until next week, this is Tim Bigham. As always, keep those position sizes accordingly and those stops in place. Take care.